Hello and welcome. You're watching Business Today Television. I'm Tanya Aneja. Well, gold prices continue to glitter, and how the yellow metal touched its new lifetime high of 61,490 rupees per 10 gram on MCX after US Fed raised its interest rate by 25 basis points and hinted it may pause further increases. However, according to the World Gold Council, the Indian gold demand in the March quarter fell 17% to the lowest level in 10 quarters, and it is likely to remain subdued even during June and September quarters on record high prices. So, is it still a good is it still a good time to invest? Where is this yellow metal headed going forward, and what is the outlook for 2023? To discuss this and much more, let's welcome our guest on the show today. We have with us Sugandha Sachdeva, who is independent commodity expert. Thank you so much, Sugandha, for taking the time out and joining us here on Business Today Television. So, Sugandha, let's talk about first the statements that are coming in from WGC. So, they are saying that the softness in demand is likely to continue for the next 2 quarters as well, and the lower purchases in the world's second biggest gold consumer could limit a rally in global prices. So it is important to now note that we recently celebrated Akshaya Tritiya, I mean the second biggest gold buying festival after Dhanteras, but the demand during that festival was also modestly weaker than the last year. So firstly, how do you see the statements that are coming in from WGC? What could be the reasons, and do you think the softness will continue going forward as well?
Yeah, hi Tanya. Thanks for having me on your show. So, if we look at gold prices, there has been a stupendous rally that we have already seen in prices, wherein prices are up by close to 11.5% this year, and they have marked a high of around 61,845 per 10 gram mark. So, the precise reason why prices have been rising is that the markets are expecting the Fed to actually cut down interest rates by the end of this year. So Fed in its recent meeting has already hiked interest rates by 25 basis point, which was already priced in by the markets, but then they have removed this line that they anticipate further rate increases to tame down inflation. So this is perceived by the market participants as a signal that they are likely to pause this year-long aggressive tightening campaign. So this is the major reason which is fueling the rally that we have seen in gold prices. But yes, prices are already quite overstretched. And that is the precise reason we have seen a decline in overall gold demand from Indian markets. India is the second largest consumer of gold, and in case there is a drop in demand from Indian buyers, I think that will certainly have some impact on gold prices as well. Even though the near term fundamentals are very positive and longer term fundamentals are also very positive for gold prices, and we also see prices surging further higher. But then at least in the near term, we can see some softness in prices because see, we are already past this peak festival of Akshaya Tritiya. The demand was slightly modest, and we have already seen in the first quarter of this year that prices have surged significantly higher. So there may be some more buoyancy that we may see in prices in at least short term, but after that, prices are likely to consolidate and correct a bit. By the end of this year, I think the fourth quarter, where we have the wedding season as well as the festive season, we will again see demand surging significantly higher. Globally, also, we have seen in the first quarter of this year, the demand has decreased by 13%. So, this is all driven by the fact that prices are significantly higher and buyers are waiting on the sidelines and waiting for some correction in prices to again step in and ride this ongoing rally that we are seeing in gold prices. So overall, for the year, I think the demand from India is likely to be to the tune of around 750 to 800 tons, which is a normal. I mean, last year also we had seen demand at 774 tons. So I think this year also the demand is likely to be in the range of 750 to 800 tons. This is also as per the estimates of WGC. So I think overall demand will be very strong, and last year, if we see globally, the demand was 18% higher globally. And central banks have been continuous buyers. In fact, last year they have bought gold worth 1132 tons, which is almost to the record high which we have seen in last 50 years. And this year also they have been buying, and I think this trend is likely to continue well through 2023. So this would be a major factor that will lend support to gold prices. So some softness is quite likely, but then overall the trend remains very positive.
Okay, so that's the word coming in, and that's the demand outlook as well. But Sugandha, gold has actually outperformed other asset classes. So, is it still a good time to invest? I mean, does it really make sense to invest after the kind of rally we've seen so far?
So I still feel that yes, there is no perfect time to buy gold. Gold should always be a
Right.
part of your portfolio. And I think it's a strategic asset to your portfolio. So one should certainly allocate a portion of your portfolio that could be in the range of 10 to 15% normally. And in this scenario where we have a lot of concerns about the banking crisis in the US, wherein also we have concerns about a slowdown, the global economic slowdown driven by and engineered by the high interest rate environment. So in this scenario, the allocation can be increased to 20% as well. But yes, I think gold will continue to outshine other asset classes this year when we have a lot of concerns about global economic slowdown as well as the banking crisis in the US.
Okay, absolutely, Sugandha. And what is your outlook for 2023? Because we talked about near term, medium term, but what are the levels that you're working with for the rest of the calendar year 2023?
We have already seen a strong rally, and this rally is likely to peak out towards level of around 62,200 to 62,500. So some more room for upside and buoyancy in prices, but then from 62,500 odd levels and levels of close to 2120 to 2150 odd levels at international markets, I think the near-term rally will peak out at those levels, and we may see some profit booking. But then from a year-end perspective, I think any dips in prices towards 1900 per ounce level in international markets and levels of close to 58,500 mark would be a good buying opportunity. And I think investors can actually stagger their purchases at lower levels. So from a year-end perspective, I'm expecting levels of around 65,000 first, and then we can see this rally stretching towards 68,000 mark as well. So in international markets, I'm expecting levels of around 2250 to 2280 by the end of this year. So majorly the factor that's going to drive gold prices is the fact that in US Fed might actually cut down interest rates considering it's the impact on the US economy where we are already seeing some signs of a slowdown. If you also see the labor market data which has been quite resilient, but then in today's non-farm payrolls data also the non-farm addition is likely to slightly come down. So this would be the third consecutive month wherein the pace of hiring is slowing down. So this will actually have an impact on the US economy. And towards the end of this year, we are expecting significant impact on the US economy, and that will actually force the US Fed to cut interest rates. So that will lead to a further decline in dollar index. And we see that in case dollar index breaches the crucial support of 100 mark, it is likely to head lower towards 94 levels. So that will be a very strong catalyst that will drive gold prices on the higher trajectory. So my sense is that prices can scale higher towards 65,000 to 68,000 and dips should be used as a buying opportunity.
Okay, dips should be used as a buying opportunity, and 65,000 is the level that is coming in. And keep an eye on that. And also, Sugandha, as gold glitters, silver prices are also trading higher. So, what are your thoughts on silver, and what should investors really do with this asset class?
I think silver is also in for very good times, and in fact, it's been long a laggard. I mean, it has not performed. It has been an underperformer amongst all asset classes. But then this year, we've already seen silver prices soaring higher by around 12%. And if you look compare it from the September end, prices have already surged by around 44 to 45%. So it has outperformed gold as well in terms of the price performance. I think this outperformance is likely to continue in the near term as well as in the longer term. There are a lot of reasons which are actually supporting silver prices. So silver, the industrial usage of silver is actually on a rise. We have already seen that silver market has been in a deficit situation for last 2 years, and this deficit is likely to continue for next 5 years as per the estimates. In fact, the estimates suggest that in next 5 years, silver market is likely to be in a deficit of around 100 million ounces. So demand is rising from the solar panel sector, the demand is rising from the electric vehicle segment, and also from the electronic segment. So all of these factors are driving the demand outlook for silver. Besides this, the decline in dollar index, the concerns about global economic slowdown. So these are also the factors which are driving the investment demand for silver. And in terms of the price outlook, if I look at the price setup, we have already seen that prices have surged to new record highs in the July series at MCX. And I think this momentum is likely to continue in the near term towards level of around 80,000. But yes, prices might witness some profit booking from those levels. But then otherwise, for a year-end perspective, I'm expecting this rally to continue towards 86,000 to 88,000 mark at the domestic markets. And in the international markets, we are looking at levels of around $30 per ounce. So once we see a clear breakout about $26 per ounce, prices are headed higher towards $30 per ounce. So the overall macroeconomic backdrop is very favorable for silver, and investors who can look for slight higher volatility are advised to invest in silver as well, because the long-term outlook for silver is also painting to be very positive.
Okay, positive outlook. That's the word coming in. And on that wonderful note, thank you so much, Sugandha, for taking the time out and joining us here on Business Today Television. So, with that, it's time for me and my team to wrap up this episode. But don't forget to follow us on our social media platforms Facebook, Twitter, LinkedIn, Instagram. Don't forget to share your feedback. So, stay tuned for all the latest market updates, and many thanks for watching.
With rapid digitalization happening